Hi there, welcome to my channel. So as you guys can see, here's an update on my portfolio. We're fairly close to about $250,000. And so the market's been pumping for now past week, past month, past 3 months. Not bad so far. And I guess the market is pumping in anticipation of rate cuts. And rate cuts should be coming, I guess, by Wednesday. And so hopefully those rate cuts come through, and I guess if they do, I'm assuming the market will continue to rally, maybe even stronger, potentially. And so, as you guys can see down here, practically all of the ETFs that I own, a lot of them are in the green. And one of the changes that I wanted to talk to you guys about my portfolio is that I've sold off a lot of Yieldmax single stock ETFs and decided to go with the Roundhill single stock ETFs. So I sold all of my NVDY, which is the Yieldmax version of NVIDIA, and went with the Roundhill version of NVIDIA weekly pay. Because well, as I've mentioned in previous videos, the Roundhill single stock ETFs have both income and growth. And since they have 1.2x leverage, if the market continues to rally, well, these will do very well, because they're going to capture some of that upside, while the Yieldmax version of these ETFs has capped upside. Not saying it won't capture any upside. They will capture some of the upside if the market continues to rally. But there's a limit to the upside that they can capture, the Yieldmax ETFs. While the NVIDIA, or the Roundhill version of NVIDIA, and any other, I guess, single stock, Roundhill version single stock ETF, any one of those will capture more of the upside and pay you a very good dividend on a weekly basis. As a matter of fact, I believe these pay on a Wednesday. And so another ETF that I wanted to show you guys that I wish I would have bought more of is this one here. As you guys can see, this has gone up about 1.50% today. And it's based on gold, NEOS Gold High Income ETF. So moving forward, will gold continue to rally? I think it will. I think gold is probably going to continue to move higher because of interest rate cuts, and because of the the devaluing of the dollar. And so which one would you have? Which one would you rather have? Would you rather have the dollar, or would you rather have gold? And so I guess a lot of people like to buy gold. And I don't own any physical gold, but I do own this ETF that tracks the price of gold. And so if we look at a comparison of this, the gold ETF, which is just IAU, which is the gold ETF from, I believe, iShares, and the NEOS ETF. As you guys can see here, the purple one is the NEOS Gold ETF, and the blue one is the actual gold ETF. And so yeah, the regular gold ETF has outperformed the NEOS Gold ETF. But nonetheless, there is some appreciation, and it's paying you a dividend. It's paying a pretty decent dividend. So if we go back to my actual Robinhood portfolio, we can look into just how much it pays. If we scroll down here, as you guys can see, here's the last dividend that I received, and it's paying about 51 cents per share, and I have 22 shares. I haven't bought any more. I guess I may be buying more later on, but currently, since the market is rallying, and we're in greed, And down here, as you guys can see, all the major indexes are in the green. The Dow Jones, the S&P 500, and the NASDAQ. And who knows, probably tomorrow it's going to continue up until Wednesday. And so, what's going to happen on Wednesday? Well, if rates get cut, I've heard that they may be cut by 25 basis points, which is basically 0.25%, then I guess the market should rally. And it's been rallying on anticipation of that rate cut. If for some reason there is no rate cut, which is highly unlikely by this point, I'm assuming that if there is no rate cut, then I guess we're going to get a dump. There's going to be a major red day in the market. But I believe currently there's about over a 90% chance of rate cuts. So the assumption is, I assume that it's going to be cut. Of course, all of this is for entertainment purposes. None of this is financial advice. This is just for entertainment. And I'm just showing you guys what I'm doing with my money, with my portfolio, and what I'm doing with my hard-earned money from my job. And so if we look over at dividends, this is my dividend tracker. And let's look at dividends. As you guys can see, we should be making about $5,700 on a monthly basis. So now that I've made the switch from Yieldmax to mostly Roundhill, this is the current estimation of what I make on an annual basis and what I make on a monthly basis. It hasn't really changed much. Okay, maybe it changed a little bit, but not that much. I still own some Yieldmax ETFs, mostly the ones that are diversified. I still own Yieldmax, ULTI, YMAG, and Chippy, GPTY. I think that's about it from Yieldmax. I think I'm going to hold on to those probably, but I may reduce my YMAX position and my ULTI position, potentially. I may reduce those two to buy some WPay. Now, I currently don't own any WPay whatsoever. It's WPay from Roundhill. So currently, I don't own any WPay. But if we look at WPay, it's already up in the past week, 3.80%, which is very good for just the past week. Hasn't existed for the past month, but it's even here in the past month, it's up 6.44%. So it's been doing very well. It's probably because the market is in a rally. And so if we scroll down here, as you guys can see, it is still 100% maintenance. And so that's why I currently don't own it yet. As I've mentioned before, I believe it's going to probably go down to 30% maintenance. One of the things that I barely noticed today when I looked at it is that when you look at the other single stock ETFs from Roundhill, they have a little yellow indicator at the top. Let me show you guys what I mean here. Let's scroll to the NVIDIA one. You see that yellow indicator up there? It says leveraged. These say that they're leveraged. But when you go to WPay, when we check out WPay, it doesn't say that it's leveraged up on the top, even though it's based on all those single stock leveraged 1.2% ETFs from Roundhill. But this one doesn't say that it's leveraged, which is kind of interesting. I guess it's not considered to be leveraged. And so I'm just waiting for this, for the maintenance to drop. So because as you guys know, I take all of my income, all of it, everything I earn at my job as a welder, which is about $1,000 a month. I take all of that money and I throw it all into my portfolio. And usually I spread it. Either I spread it all out into at least 10 different ETFs, or sometimes I just cut it in half, which is 500 and 500, and I buy something really high income and then something that has greater appreciation. So usually that's what I do, because at this point, why would I keep any of my income from my job whatsoever? Because the way that I pay for all of my bills is with margin. As you guys can see here, here's the buying power. And the buying power is at $328,450.10. And so half of that is withdrawable. So basically, half of that money is withdrawable. So just about $170,000 currently is withdrawable. And based on my expenses, my monthly expenses, there's absolutely no way that I'm going to spend $170,000. Yeah, not even close. I mean, of course not. And so every month I pile in all the cash from my job. I put it in here. I buy something that's going to pay me something, or something that's going to appreciate in value. And I pay my bills with margin. So towards the end of the month, you're going to see this number here that's almost at $250,000. It's going to go down because I'm going to remove some margin. And so I got this bill that I got to pay. It's like over $3,000. So I'm going to probably be paying for that by Friday. So you will see this number decrease. The number that you will not see decrease is this other number here. This is the total amount that is invested. This includes the margin that I'm currently using. Over here, this number here is just my money. This is just my money that I have invested. While that other number you see includes my money and the margin that I'm currently using. And so I'm roughly using about 30% margin currently. My goal ultimately is to reach $10,000 in monthly income. So according to this analytics here, if we scroll down here, $10,000 a month is $120,000 on an annual basis. And according to this, I'm about 57% of the way there. According to this estimation down here, it says 2 years and 38 days. So, that may be accurate or it may be a little bit off. But according to this, just a little bit over 2 years, I should be making about $10,000 a month if things continue to go well in the market. And I'm able to continue to invest all of my income from my job. So yeah, that's my goal. I know that I can, use a little bit more margin and probably get to 10,000 like right now. But I really don't want to overdo it with margin because just don't really know exactly what's going to happen in the market. It's unpredictable. There's lots of enthusiasm right now. There's lots of, I guess, looking forward to the market to continue to rise because of rate cuts. And plus, we're heading towards the end of the year. So, usually by the end of the year, things do continue to rally. But we'll see. We'll see. I don't want to overdo it with margin. And so if you guys appreciate this information, if you guys find this entertaining, please do me a big favor, like, share, and subscribe to my channel. I really would appreciate it. I will continue making these videos. I will continue dumping all of my income from my job into my portfolio to increase my dividend payouts and to increase the number in my portfolio, or the value in my portfolio. And of course, you will see it fluctuate up and down because the market has volatility. And also you will see this number go up and down because I'm going to remove money to pay for my bills. And it'll increase, it'll go down, it'll do what it's going to do. But that's how I'm paying for all my bills. And thanks so much for watching. Another really great thing that I wanted to mention just before I finish the video here is these NEOS ETFs. I know I've spoken about them before. They're probably my favorite ETFs of all because they track the two major indexes, which is the NASDAQ and the S&P 500. This one is based on the NASDAQ from NEOS. And as you guys can see, I have a pretty good amount of cash in this ETF, over $100,000. The value and total return has increased to over $6,000. And so the great thing about this ETF is I have not had to reinvest not even one dime back into this ETF. And it's paid me over $1,000 a month ever since I started buying it. As a matter of fact, it's been paying about $1,200 on a monthly basis. And so I expect to get paid just about that same amount here in September. Also, SPY-I, same situation. This ETF has also been appreciating, and it's based on the S&P 500 from NEOS. And so as you guys can see here, this has a total return for me of over $5,400. And it's been paying me about $1,000 a month. And so these are the two largest positions that I have in my portfolio, and they are 25% margin maintenance, which is really great because the actual amount of my money that's in this ETF is that number that you see right there where it says maintenance requirement. So it's about $26,400. So only $24,600 of my money is in this ETF. But as you guys can see, I own over $100,000 worth of this. And it pays a really great dividend, and it tracks the index. And the S&P 500 is great because it's always come back from a crash. It's just like it came back from the tariff crash back in April. And so I've been doing this for a while. And so thanks for following along. Thanks for watching. Please do me a favor, like, share, and subscribe to my channel. I know that I mentioned it before, but I really would appreciate it if you guys did that for me. It'd be helping me out a whole lot. I do want to grow my YouTube channel. I'm looking forward to increasing my subscriber count, increasing the views, increasing the likes and all that. And I really appreciate it if you guys would help me to do that. I'm hoping that my channel picks up some amount of steam and gets going, and more people start watching. Well, thank you so much. You guys have a great day. God bless, and we'll catch you in the next video. Bye.